We're snorting cap rates and shooting up cash flow here at Deal Junkies. Welcome back to Deal Junkies. Gabe, Dane, and Mike back in the studio. We are excited to talk about deals without Trevor, because this is his favorite part.
He ruins the deal conversation.
We want to give him FOMO right now because he's out snowboarding.
So focused.
Yeah. What deals are we talking about?
I don't know. What deals do you guys want to talk about? Dane had some deals he wants to talk about.
We just dropped a deal.
What?
Which was a bummer. Well, we were talking about last episode. We talked about places that people want to live, and I think we were looking at a deal in a place where people don't want to live.
In Oregon?
Yeah, and we're perfecting our acquisition system right now, and so the roles and responsibilities of who does what for DD, and so sometimes you have it where you have overlap on stuff, and so it's like one person's doing the same thing as another person. Obviously not great. You want one person doing it. Sometimes you have it to where it just doesn't get done. Also not great. And then what we had this time was maybe where somebody who hadn't been around the block on this particular portion of DD was doing that portion of DD. And so I did my part of not doing that because I was like, let's let him have it. And he's really, really good at it, but there's still, it's weird how you can, so it was a rent study, and it's no fault to him. Like, it really isn't. There's such an art to it, though.
It's qualitative versus quantitative,
dude. And
paper is not reality.
Well, and like we have all the software programs that'll tell you what rent should be.
Those softwares are not out there. They don't know what it feels like to be on that street.
And so even when it's like you give it like a mile radius, like especially somewhere like Portland, and so it was outside. I mean, it was in a submarket of Portland, outside of Portland. That isn't super desirable.
Here's the easiest way to like break this down for someone. Would you rather have 1,000 square foot home with an 8-foot ceiling, or 1,000 square foot home with a 6-foot ceiling?
8 foot.
Okay, so is it $1 per square foot?
Nope.
Or is it $1 per cubic foot?
Okay,
right.
That's a good point.
Sure.
It comes down to what it feels like, not what it is.
No,
on paper.
That was what it came, because I was looking at stuff, and it's like, hey, we're going to turn these really, really nice, but then you're comping it to something that's like that's like 4 blocks down the road, and that area is a little bit nicer, and those units are a little bit bigger, and that's a new product, not a flipped product, and people know the difference. People know the difference between those two things. The layout is different. The feel of the construction itself is different, whatever that even means.
The amenity war is different.
The amenities are a little bit different. And it was like, even if you just did price per square foot basis, if we were dollar for dollar or penny for penny where they were at, it was way lower than what we projected our rents at. And I just hadn't dove into it yet. And that was my bad. I feel bad about that because I had pitched it to investors already, and then got pushback, and then I did my deep dive because I had looked at it and been like, okay, yeah, that feels close to what should be right. But then when I did the deep dive, it was like, oh my goodness. And on a project that you're doing a heavy rehab, like, you can't be $100 off, at least on the bottom end. Like, your worst case scenario has to be your actual worst case scenario. It can't be $100 below that. Because
it's a double-edged sword, right?
Well, yeah, it's like, okay, you can be $100 off as long as your worst case still works.
Yeah.
And it's like, okay, maybe it'll hit this, but 100 lower still is fine. But then
it's the scale. It's the scale of it, right? Like, because you're like, man, we bought something, we increased rent $100, and I'm like, well, that's not exciting because of the scale of what you buy versus I do.
Yeah.
But if I miss mine by $100, it doesn't matter.
Yeah.
You missed that scale by $100, it matters.
Well, it's $1 million.
Yeah.
It's $1 million. And when you're going to a project and your goal is to make $1 million on the project, all of a sudden you shouldn't do that project.
Correct.
and so, but it was funny because, like, you're talking about the qualitative versus the quantitative, and on paper it looked pretty right. And then like I did a deep dive, and so we all had to sit down in the conference room, and I was just like, okay, look at this property. Why would this unit right here that we're trying to rent for the same as this unit? Then there's 4 of that unit vacant at that property right now, and that property's nicer. And it was like, okay, it won't. And like, you can look at that though and be like, okay, 2-bed, 1-bath, 850 square feet. Cool. No, that's a 2-bed, 2-bath, 850 square feet. This is a 2-bed, 1-bath, 800 square feet. And it's like, that's $200. Like, or it can be, 900 square feet. Like, especially if that property has a nicer weight room and a pool that's covered. Like, you add all of that stuff up in a market like that, and you're not anywhere near where you want to be on the. And so we dropped the project. Anyways, that was my story of a bummer.
But it's a great story because you just gave a really insightful, detailed analysis of speculation and risk mitigation.
Yeah.
Risk mitigation.
Yeah.
Like that is how it's done.
Yeah.
You have a quant do it on paper.
Yes.
You have an expert actually see what the level of risk and speculation is.
Yeah. And that was that was the side of it where I was like, okay, there was a world too where when we finished the project a year from now, because like there were 2 projects in lease up that were
so
pretty
we
close
can talk
by.
about like, so where does it make sense to then be that level of speculative,
Sure.
right?
Yeah.
So where is it in relay to the bigger change of the macro community? Or
that was that. So the issue from when it makes sense to be speculative, the time that it makes sense to be speculative is never unless you've calculated the downside. And so that's where it was like you can't like
spoken like a true financial analyst.
That's the whole thing, though. Is it's like no.
Okay.
Never.
Yes.
No, because here's the thing.
But that's not how. But that's not how risks are taken in real life.
That is how for us. I'm not raising money from somebody unless I want to know. I want to know what my worst case scenario is, and then whatever could happen beyond that is awesome. Like I'm not. Yeah. And there was a real world where, and I was looking at it with him, and I was like, dude, I'm not saying you're wrong on what the rents could be here. What I'm saying is you're wrong on what they might be. Yeah. Like that's the same thing, right? But it's like they could be that high, but they might be this low.
Yep.
And like I'm not going to invest in a project where they might be that low because I own that project in a different market that we didn't raise money for.
But okay, so now here's the difference. What I'm trying to get at is if you know that, 4 blocks away is where it's all going on, but you have the back end longer term demographics that will come out to 2 blocks the other direction, now you change the deal structure. So that if you do hit that low end,
and that's what we did. Yeah. And so we just we went back and I was like, hey, here's how the deal like still does work for us. But the structure we had it on was with hard money financing.
Yep.
And I was like, I'm not going into that deal with 2-year debt. There's no shot that I go into that. Because if I go in with 2-year debt, there's a very, very real possibility that I might not even pull all that debt out.
Yep.
Like, and so I'm not playing that game. Like, I need to know on the front end for a project like that. There's stuff in Salem that we would do on 2-year debt because we know Salem well enough to know that we can write it. But it just wasn't close enough to our backyard to 1, feel at all comfortable with any level of speculation. And then 2, to say that I'm going to go in on 2-year financing because we didn't have the contract timeline we needed, and so we were at a 2-month financing period, and it's like we're not going to get the debt that we want in 2 months. If we're gonna try to go to a credit union and get whatever a rehab loan that goes to perm or construction to perm. It's going to take us 4 months, 5 months to get that loan, at least right now. Mm-hmm. It feels like part of that is just like lenders haven't been lending money. And so they're like out of practice on how to close deals quickly.
They're just being cautious.
One of Jay Scott's predictions was that lending would get tighter this year.
Yeah, I saw that.
That was an
tighter?
Yeah.
Huh.
I don't know how I agree with that.
Did he break that down?
He said. Yeah, he said just tighter credit and LTV. Like it was really kind of a surface level answer.
Well, he said he wrote a detailed answer in a newsletter that you can get where he talks about.
Oh, did he say that? My comment?
No. He just said
he
said here's the bullet points, and if you want to know all the narrative behind each one, you can read my newsletter.
Okay.
And it'll
I didn't. Yeah,
I was gonna say that doesn't sound like him to throw something out there and not back it
no.
up
But
with.
in relativity to all the other predictions, it doesn't make a whole lot of sense. So like one of them was he does believe in a mild recession. He does
This
believe
year?
Yeah, he does believe in gold prices are coming down, which says a reallocation of capital, right? A recession, reallocate out of gold, which then would say in the bond market, which would be lowering rates. Lowering rates increases LTVs and he said specifically in the real estate and business world lending. So it's like, but in the real estate world, what you predicted would create an environment where LTVs can go up. And if LTVs can go up, banks will be releasing more capital. And so I just it still doesn't reconcile right in my mind.
Is gold a good indicator? Is it counter-cyclical to our market, real estate, and interest rates?
Yep.
So we want to see, like when gold...
We want macro money out of gold.
So when gold is going through the roof, that's a bad sign for us.
Yep. We want them out of the stock market and out of the gold.
So gold and stock market have gone on a few-year run. I mean,
Fuck those things. Sorry.
Kind of makes you feel dumb for staying in real estate.
Oh, God. No, don't you. Shot in the heart.
I'm going to sell all my buildings and buy gold right before it drops.
That's hilarious.
So people go into gold. Why do they go into gold? Like just as a is this no faith in our dollar?
Yeah, well, I guess before 2022, you would actually see money flee into gold and bonds because they're both kind of a safe haven. Gold is just a much safer haven now because the American debt is less of a safe haven.
What's going on with silver? That's going crazy. Like,
Well, silver is because silver has an actual use, right? Like silver is a resource, not a commodity, and gold is too to an extent. But silver has, from what I understand, a lot more like industrial use, military,
okay.
whatever.
Conductivity.
Conductivity.
Yeah.
Is that what it is? The
Yeah.
conductivity gives it a better use?
Yeah, it's used.
So gold is used for fucking jewelry and silver is used for
gold-
actual
I mean,
stuff?
gold is used in microchips and all the other stuff too, isn't it?
gold is? I don't.
I
think so.
thought. Well, maybe I'm wrong.
You're probably not. You tend to be right. I have no idea. I know that silver is at a much higher level.
Okay.
But silver also so like
Or I don't.
Jake-
I guess I don't know that it is more frequently though. It's cheaper.
Yeah, exactly.
Yeah.
It has maybe similar conductivity,
Probably.
but it's
it's substantially cheaper.
$70 an
But
ounce
it's less
versus
pretty.
4,000 an ounce.
So what is it? What changed the psychology around it, right? So like
Around
one of the
gold.
aspects is J.P. Morgan has a huge vault of gold, and now one of the changes is their psychology is different. They are now long on gold, silver instead of short on silver.
Hey, whatever happened to Elon Musk going to Fort Knox? They were going to go show us all the gold, and they never did that.
Because Doge wasn't real.
Is Fort Knox real? Is the gold actually real?
Yeah. Wait. What wasn't real?
Doge. Everything.
Don't tell that to all my buddies that lost jobs from Doge. It seemed pretty real to them.
Ah, fuck. That's a great way. Like, it was absolutely real to them. But, like, what Doge
Yeah.
was supposed to be was not real.
Well, I think it was. I think he realized. I mean, he realized that he wasn't actually going to be able to have the impact that he wanted to have.
No,
with
I think he
Doge.
realized, well, I think to him it was real. It's just not real to the administration.
Well,
That's
it wasn't
why-
real in the sense that he couldn't actually do what he thought he could do. He was like, you open the can of worms, and it's like, man, there's a whole lot more worms in here than I thought. I can't eat all these.
Do you
he
really
ate like
think it's
one, and he
you
got out
think
of there.
That's it.
I mean, that's what he said. Yeah, he was like, I realized, I like his whole thing has always been, I want to find the biggest problems in the world and solve them. And then he realized that the best way for him to solve the problem of America's debt, GDP, but really global, like debt and GDP, is not through getting in there and reducing costs.
Through income, not expenses.
It was through income, through AI. And so, and he spoke about that, he was just like, I knew that I could do more, have a better positive outcome,
You
get
said
more out
something
of
on the
my
last
effort.
episode that resonates greatly with this, which is people just innately don't like their jobs as much anymore.
Yeah.
They don't get as much innate value in life from their job. And I think one of the best potentials AI has outside of solving our water consumption problem that it's creating is the ability for people to love their jobs, because now we're going to a creator capitalist world where now if the basic level of productivity is handled by AI and robots, now we get a focus on art. And if the level of productivity is there, that now we have the enough resources that frees us up to focus on art and actually creating, people can innately love their life and their jobs and their work more.
Creative jobs are, historically have a larger number of depressed people, do they not?
Hey guys, Gabe here. Have you seen the exciting new projects we have going on at Stack Asset Group? If you're interested in investing with us, click the link in the description below.
All like the best artists were extremely depressed, but even at a general population level, I'm not saying I disagree with you. I do think that
Is it because
I think the issue with AI, and because I talked about this probably 10 episodes ago, and like my concern with AI is that the people don't derive purpose from the actual work they're doing. People derive purpose from the feeling of being needed. And so the fear that I have with AI is like you get the universal basic income.
well, there's so many bots
really
out there that can make you feel needed even though you're not actually needed.
Yeah, but it's not real and your brain knows.
Nah.
Your brain knows.
Nah.
For sure it does. What are you talking about?
Siri tells Mike how much he's needed every day.
Nah, dude. It's all psychology. Exactly. It's all psychology. It's how level, what you're talking about is to what level can AI trick us that it's real?
Your brain is wired though to not actually want short-term dopamine hits. It's a drug. Like AI can maybe solve it. It can become another drug, but your brain still knows that that's not what it wants. Like your brain wants to have an actual purpose. That's
sure, but then it still doesn't change our actual patterns and our actual psychology, right? So you're talking about, well, it's the conscious psychology versus the unconscious psychology. Subconscious psychology.
What happens to the people who are not creative, who like to stand in an assembly line and
so what is the psychology? What we want or the actions that we actually do? What is psychology?
Well, I don't know. I was just saying people.
How do you define it? How do you measure
be
it?
more depressed.
I don't know. I'm a data guy. All right, let's talk about deals. Who's got a deal we can talk about?
Yeah.
Dude, okay.
Mike's going to talk about deals.
It took me 4 hours to negotiate the restaurant deal. It's taking me 40 days to negotiate a triple net lease. It's really frustrating.
With the bar?
Yeah. I like him though. We're gonna get it. It's just the timing of it all, and I like the broker. I love the tenants, and I've been told 15 times a signed lease is coming over.
I saw you on Facebook on a video. You were breaking ground on something. They were pouring footings or something.
The first build to rent one.
You're doing. What is this?
It's this. It's the 1 in 5. So 1 unit with the plan to build 5
more.
Yep. And so there's a speculation in it. So we just broke ground on 6, right? So we bought it with the fundamentals of 5, building 5, but we actually decided we always could build 6, but we decided it would be better to build 6.
Are these separate buildings? Or?
Yeah, they're separate cottages. So we have 3 floor plans, 2 of each, and it's cool. It slopes up from the street, and the lot faces north and south. But if you know Portland, Mount Hood's to the east, downtown's to the west. And so it slopes up, and it's like on this little cap. And these are deep lots. Instead of a 50 by 100 lot, we're like a 50 by 209 lot or something. It's fucking deep. It's amazing. And so now it's just these big, tall units that get to look over a lot at downtown Portland. So these are going to be cottages that have a view of downtown Portland.
Oh, that's cool.
It's going to be sick. And the 3 floor plans. So again, the early adopters. So code defined first phase. Everyone's doing 800 square foot units because that's what code allowed. Then fourplexes came out, maybe 900 square foot units. And then now cottages, you can do bigger, right? So we redefined everything to 3-bedroom floor plans. We have a couple 2-story floor plans.
Oh, y'all's cottages can be bigger than
1,400? We have a 1,495 square foot 4-bedroom plus a den cottage
with
ours
attached garage,
no parking.
That's just Portland.
No
Anybody
parking.
Listening, that is not Salem.
Yeah, that's Portland.
Okay,
yeah,
I was like, whoa, that's sick.
No, you can't do that. The demographics aren't there for sale.
What will that unit rent for?
It'll be in the 3s somewhere. We're.
How'd you put that deal together? You bought a house with extra land? So it's a covered land play.
No. It was pure speculative development play.
An uncovered land play
is an uncovered land play. There's been no income. This has been.
Oh, really?
Yeah, like calculate yield. You just can't calculate yield yet, right? Like, I don't know. We don't have any income yet. Spend expenses.
Yield, not great.
What is yield when you don't have any revenue? Is that a broken or is that a 0?
It's probably
yield 0.
Error.
Yeah, an error. It's an error.
Yeah.
Yeah. So no, it was the whole plan is we're going to build these out. And then the plan is once you build that out, there's a back value. So then a plan to fund all of that. And so we just did Renovo loan on the front end. Got the equity we needed to get past the phase 1, which was the permitting phase. And now we got rolled into phase 2, which is now a construction loan to build it all out. And then hopefully there's some really good financing on the back end.
Oh, that's sweet.
Yeah. So I penciled it out like 5.75% interest rate. It becomes a good deal. I'm really excited about it at 5.75%. They'll be done April, May-ish.
You should be able to get there.
Yeah. Like if okay, that's landing the plane. If we're at 5.75 in April, May, the plane has been landed and projects like that can just go.
Yeah, we're seeing quotes in the mid 5s on larger projects.
Yeah, but I'm in a different market than you.
That's true.
I mean, for like DSCR debt.
Yeah. That's
a different market.
That's a low.
That's a different market.
That's a low DSCR, right?
But DSCRs and like you can buy it down to about that right about now.
Right now.
Yeah.
Wow.
Yeah. 3 points. 3 points. You can buy a DSR down to 6 right now. 3 points will get you to 6.
Expensive.
Yeah. Well, you live in a whole different world, man.
Yeah.
Yeah.
What are the most exciting deals you guys are seeing? Are you seeing opportunities pop up?
I think land. There's so much land right now because nobody's built anything for the last 3 years. So nobody's like started projects. Certainly they didn't start them in 2023. And then some people probably started them in 24 because they could see the writing on the wall. And then 25 people definitely started projects. But no, that's the pre-development phase. And so there's a lot of people that have like plans now who have been sitting on land for 5 years who either just like aren't building anymore, but they had the land and they could take it through the plans phase to get to permits. And so we have so many people that want us to like build projects with them right now, which is super exciting because they don't want to do the part that we want to do. Mm-hmm. And then they want to pitch their equity in the land that was extremely suppressed for a few years.
It wasn't there?
Yeah, that wasn't there.
Because there's no yield?
Yeah.
And an impossible place to get to yield?
Yeah. I mean, they couldn't, you couldn't have built it for, if they would have given us the land, we wouldn't have built on it.
So yield
3 years ago.
Yield doesn't exist.
Yeah.
The possibility of it doesn't exist in that environment.
It
And
feels
now it's back.
It's perfect timing to launch Stack. I mean,
It's so good. Yeah.
This is right up our wheelhouse.
I think we have, like,
Is your focus going to be on new construction?
I mean, I think it always has been.
You did.
I've always said I wanted it to be.
Isn't that how Tokarski got big?
Yeah, and then he went off. He still builds a lot of low income. He does a lot of lift grants and LIHTC stuff. Mm-hmm. But I think they also made a ton of money in storage and senior housing. So I'm not sure exactly where the bulk of it came from, but I do think it started with apartments, and they still do some apartment stuff today.
That's how. What's his name?
Tokarski definitely still does apartments, right?
Yeah.
Okay.
I think they've backed out of storage, at least last time I talked to somebody about it.
I didn't even know they were in it.
And I also don't think that they're doing as much in senior housing, but I could be wrong. They might be doing that again. I mean, everybody's talking about how hot senior housing is.
The pattern is they're just junkies. That's what the pattern is.
Who?
Well,
those guys.
I mean, you think of the biggest teams in there's the Tokarskis, but there's the same dude in Portland, and it's the exact same thing. Mm-hmm. New construction apartments, covered land plays, storage, like they're just junkies is what it is, and they got land and then know how to build. Yeah, no matter what.
They got a money printer. I mean, if they know that there's a demand for it, they can just bring it out of the ground.
Once you make the foundation too, and then you figure out how to structure deals.
So what's the money printer? Is it the negotiation on the back end with the money that will fund everything, or is it the labor that can get it done?
Think about why you would go into senior housing when you can take a unit that you're building for, back in the day, you could build a unit for $80 to $100 a unit, and those might rent for $1,200 to a renter, long-term renter, but you go senior housing and now you're getting $4,000 or $5,000 a unit.
Yeah.
If you can build a business around the building or do a master lease or do something like that, you just double, triple, quadruple your equity. And it's like, why, if there's a need for this and we have an end operator to do it, or we can set that business up and then sell it, like, why wouldn't you build a senior housing facility instead of an apartment complex?
So one of my best slides last night was IRR, AAR, all that stuff's fake, right? Because it doesn't mean anything to us. The people that it actually matter to do this. It's an efficiency decision, an allocation decision. How efficient is our capital to justify us to place it here?
Yeah, because we just want to make money on a deal. They say we've got 100 deals in front of us. We got to pick the one that makes the most money.
Needs to be efficient.
Yeah.
And so that's their metric to underwrite it. And then they have one person underwrite it to that level, and then they bring Dane in to feel it out at the qualitative level.
Yeah, I mean,
He's the deep diver.
IRR inherently is
Stupid.
It has a discount rate, but but to your point, it's allocation of capital, and it's for large companies internally. Like that's the only time the metric is even valuable, because you look at all the projects
it's more
you're
money
doing
being spent, right? Like it's not just a big raise and a spend; it's a spend and a spend over time.
Because you have so much money, but it's also the purpose of the discount rate is we have this project that could make us 20%, and we know every time it'll make us that much money. Like whatever, Intel can make microchips, make X amount on their investment every time. And so the purpose of an IRR for them is what return can we get beyond that? And so it's discounted relative to 20%. Like we're never discounting to that rate. That's not the rate that we
So
would
you're
use.
saying an IRR includes a discount rate in it?
Yeah. That's and so the purpose of an IRR is for internal finance to say.
Yeah, but a discount rate isn't a part of that calculation.
IRR, yeah.
Is it?
Yeah.
Is that why it's so fucking hard to calculate?
That's why it's so hard to calculate. Yeah,
because it has a discount rate in it.
We don't like we. When
You have to include a number for a discount rate for IRR to be calculated.
Yes, you have to have it. Yeah,
so it's relative to the number you put in there, and you're saying institutional put in 20.
Yeah,
a bigger institutional put in 15 or whatever. I guess they were the rates.
The rate that we because we did a project on this where because our accounting professor had been an accountant. We didn't even do it in finance. It was an accounting class that we did it in. And he had worked for Intel, and he was like, the rate that we were, or maybe it wasn't Intel, and I don't know if he told it to us in class, but he had worked there, and he was like, the rate that we used was 28%. We didn't do a project.
There's some really expensive opportunity cost. Holy shit!
The opportunity it's
the value they create.
The value that they create doing something else.
Well,
because Intel's like, we know that we can do this project and make 28% return.
So isn't opportunity cost then the value of
your discount rate is your opportunity cost? Yeah.
Yes, I get that, but like how do you value opportunity cost? Is the value that can be created in a different platform plus a VIG, right? So they're saying is you can create 28% somewhere else. So you have to have a 28% discount rate with this capital.
Yeah.
But there's also a factor of the moving portion of it, right? So yeah, I don't know. Maybe we're getting weird.
No, I mean, well, and part of it too is to include the time value of money. Mm-hmm. And so you can't say, because if you because some projects will only take like 2 years, and so that's the other purpose of IRR is when you're saying a project that takes 2 years
fucking believe you.
Versus
don't
5 years.
I do not believe you.
Well, Mike's looking it up. Explain to us discount rate to me and our listeners.
A discount rate is just what. So
hey Siri, is a discount rate part of the IRR calculation?
Yes, in a way.
Because it's part of net present value is what she's going to say.
In a way.
In a way.
Yes.
So it's fully qualitative. It's not an actual quantitative. We put 20 in there. It's not part of the equation.
No, well, it's part of.
She's going to chime in because she's listening to us.
Yeah, it's part of the equation for net present value.
It is definitely quantitative. Oh, it's qualitative.
That's what. It's definitely quantitative.
That's what she said.
You were like, I got it. Yeah. See, the degree comes in use sometimes. But so to Gabe's question, the purpose of the discount rate is to say, if you look at a project and you say, like, okay, a project's going to get you a 15% return or something, but it's going to take you 5 years to get any of that money, then you have to say, okay, over the course of
where
so
can I
let's
have
just
made
break
money
it down.
with the money that's in there?
But so it's important too on like new construction, because like companies, even big development companies, use it for land plays. Because if you look at a land play and you say you can get X% return,
But quickly, just before you get into this, because that's really complicated.
Yeah. True. True. That's why we use AAR.
The discount rate in the net present value calculations of one of the 6 functions of a dollar is very easy to understand. right? So the net present value of a future dollar, you put in a figure that you want on the return that you want to discount that future dollar to today's value.
Yeah.
So what you're saying is NPV is a part of the IRR equation.
Net present
And so
value.
you're putting into the net present value your number to discount a future dollar to today's value.
Yeah.
And then that is part of your internal rate of return analysis. So you have your opportunity cost built into the net present value as part of your internal rate of return.
Yeah.
And so now that is actually a global qualitative way to create opportunity cost, because you're putting it into the net present value, bringing it, so when that actual value gets inputted into your rate of return, it's already discounted at your rate.
Yeah. I don't know how it's qualitative still. I think you just wanted
No, not qualitative.
you're
it's
saying
macro.
quantitative.
It's
Yeah,
macro.
quantitative at the macro
This is
level,
how you take your macro, what you want at a macro
Yes.
level, to put it into a vacuum.
Because you're saying, over the course of 5 years, I have to include inflation. I have to include the other projects.
So
that
I
could have
believe
done.
IRR now. You have confirmed to me that IRR is real
If
and
somebody knows how
IRR
to
is
calculate
good.
it, you got to be able to calculate it first.
Well, so
it was-
the reason I even bring this up before we got to go, because like last night, one of my slides was vacuums versus the world, right? And so we're buying
versus the world sounds like a terrible movie.
So the vacuums are the individual deals you're buying, right? But your individual deals need to stack up to what you're trying to put into like ultimately your goals, right? So the vacuums are sustainability. Each individual deal needs to be sustainable.
Yeah.
The world is your goals. You want to make sure your vacuums match your world, your goals. So now IRR to me is real because it has a net present value calculation in it. So that just means you want a much, much larger IRR because we have a huge discount rate in our NPV.
Yeah.
Does that make sense?
Yeah. Oh, yeah, we do.
Because
Well,
our NPV is like fucking 95. We put a 95% discount rate because you print money, right? If your idea is that you print money, your discount rate's really 100, I guess.
Yeah. Well, our discount rate internally is actually 20%.
Okay.
For projects and we don't use this to calculate.
But if you're a capital raiser, does that just mean your froth, your value for doing all this is 20%, and then the rest is going to the investors?
So no, sorry.
No, that's a different
it's when
way
I
to think about it.
when I calculate IRR for the investor, it's 20%.
Gotcha.
Because I'm saying
You're saying they have the ability to make 20%.
correct. And so
Okay.
anytime we're putting a project in and we're saying, okay, if this, like in our formula, and then we say, okay, if this number that comes out in the end is higher than 0, then we do the project, right? Because we're including all the risk that we perceive for that type of project. It's going to be a lower return for a rehab project. So I guess to clarify, it's 20% for a ground up development.
I love this because what you're pointing to is knowing your audience, because you cannot create an IRR unless you know your audience.
Yeah.
Because you need to plug
That's what I need to
them
be able to
into
rate.
your NPV to figure out the IRR.
Yes. And so I'm saying,
I
if
hope people
can't make
really
that
value what we just did for them.
I
I
think
don't know if they'll get it. It was a long class. It took a long time before.
Hey, I got off the short bus this morning, all right? Like, it's cool. It's cool.
I'm
Paul would call you guys a couple of nerds and
Paul
tell you
would
just
hate this conversation.
just buy real estate and hang on to it forever.
Oh, dude. Okay. Just the last thing. Last night, like your sponsors, you have to announce your sponsors, right? So that one painter, Jason James, was there. Michael Osborne asked him a question about shellac. It's like, what kind of shellac do you use? Do you use the old stuff? Do you use it? And dude, I took the microphone. I was like, get off stage. Don't you ever do that again. Sponsors never get to ask the audience to ask questions. Michael Osborne, shut your mouth. Like, don't ever do that. You just suck the entire vibe and energy out of the room. That is the worst thing ever.
Energy's gone.
Gone. Sorry.
That's funny.
Okay, I gotta go. I gotta go
We
look at
didn't
a house
talk
in the
about
country.
deals. That's my bad.
This episode was brought to you by Shellac.
Yeah, there is no deals.
You can put it on your
Sidetrack.
fingers. You can put it on your walls. Get rid of all the smells.
That's how it started. Was what do you do with nicotine? So I guess that was a valuable question.
It is
It was the
valuable.
level. Is the follow up question that sucked
Boots on the
life
ground
out of the world.
question.
Yeah.
Good.
All right, Deal Junkies. Hey, we love you guys. Please share us with someone, and we'll see you next time.